Two ETFs launched last week, one to address the still growing interest in crypto, the other a different business, buffered ETFs, let's call it. Let's talk to the principals of both of these new ETFs. David Botset is the managing director and the head of equity product management and innovation at Schwab Asset Management. They launched a new fund last week, the Schwab Crypto Thematic ETF, symbol is STCE. It tracks an index of global exposure to companies that may benefit from development of cryptocurrencies and other digital assets. And Bruce Bond is the CEO of Innovator Capital Management. Last week, Innovator launched the Innovator Hedged Tesla strategy, which seeks to track the upside performance of Tesla to a cap with a maximum quarterly loss of 10% or so. We'll explain all that. It's a little tough. But, David, I want to start with you. Bitcoin's down about 50% this year, a Bitcoin ETF. Who knows when that's going to happen? But several new crypto ETFs have launched, including yours. Why now, with Bitcoin down 50% this year?
You know, Bob, with the way Schwab Asset Management approaches our product development, we're not trying to time the market. So not providing an indication or our thoughts on if we're at a bottom or another place with Bitcoin and cryptocurrencies and digital assets. It's more about responding to customers asking for exposure in this space and delivering a product that will stand the test of time and provide that access to them. So that's really what drove us here. And it was happenstance that we got to a timing of a launch where crypto's where it's at today.
Yeah, you know, there must be something in the air. Horizon Kinetics launched a blockchain development ETF last week, an actively managed fund that invests in companies that benefit from digital assets. But I look at the main holdings here for the crypto thematic ETF. I see a lot of names we know well in the crypto space. These are not Bitcoin, but companies, MicroStrategy, Marathon Digital, I see Riot Blockchain, I see Coinbase, Silvergate Capital, Robinhood, even Interactive Brokers. How is this particular thematic ETF different from other crypto thematic ETFs that are out there?
Yeah, I think we really look at our differentiation in two ways. One is on cost and one is on the index design. On the cost, we've launched the lowest cost crypto-related product in the marketplace at 30 basis points. The other is about the exposure and the index design. And you're right in that the top names in the index and ultimately fund holdings are much the same across those products. But as you get beyond the top 10, our approach of combining the human insight with AI and models to assess companies' exposure to the crypto theme we think is differentiated. So you see a name like NCR Corp, which owns the largest network of Bitcoin ATMs, or StoneX, which is a company that provides institutional investors trading of crypto as well as custody services. Those are names that are really differentiated in the space. We have other examples in Japan and Europe that are in the fund, and we think that over time that's a big differentiator for investors.
Yeah, I think the problem here is it's still tough to get pure plays in any of this. With any of these situations here, remember with pot ETFs, for example, a few years ago, that was impossible to get the kind of exposure people actually wanted. And when you wanted to do gaming years ago, you couldn't just say buy NVIDIA because NVIDIA had other products. And you're still limited by the amount of real pure plays that you have out there, aren't you? Isn't that's still an issue for you?
It is, you know, and I think, Bob, as we look at whether it be crypto, any other theme, or frankly, take it to another approach when you think about sectors. You think about today's sector products and sector exposures. Well, generally speaking, you say, I want a technology exposure, but you know, think how broad that exposure is in technology. I think what we are doing with our approach in defining a thematic beta is a way to systematically assess a company. Sometimes it's a large exposure, sometimes it's smaller, that will change over time. We think that especially those smaller companies, as it has the potential to increase within their business, they may see a larger benefit over time.
You know, last week, I thought about you because I know we were going to have you on. I saw BlackRock announce that it was teaming up with Coinbase to offer Bitcoin to institutional clients. Now, right now, this seems to be only just Bitcoin, no other cryptocurrencies. But I'm wondering, that seemed fairly important to me. Are we seeing any broader acceptance of crypto? I mean, BlackRock wouldn't do this on a willy-nilly. I mean, what about Schwab clients? Are they asking for more crypto opportunities? And how do you handle something like that. It's still a very speculative investment.
It is a very speculative investment, but we are seeing certain segments of Schwab investors that are seeking to provide or seeking access to this asset category in their portfolios. So we're looking at ways in which we can do that. This is the first step in that. Will there be other ways? Potentially, but I think as part of that, we're also analyzing and thinking about what the regulatory environment looks like in the future. You mentioned what happened with Coinbase and BlackRock. I do think that's a recognition that this market is maturing. Bitcoin has been around for over a decade. And as it continues to mature and as other cryptocurrencies and digital assets continue to mature, I think we're going to see them be a larger part of our economic environment in the U.S. and globally.